Hello everyone, warm welcome to Testbook Super Coaching Regulatory Bodies YouTube channel. My name is Madhav. I welcome you all in a very important session where we are going to discuss the important questions based on finance for all those candidates who are preparing for RBI Grade B Phase 2 examination. Obviously, if you're not going to appear for this examination this year, but you have already prepared, you have already learned about the finance topic and you want to check your skills, you want to check the level of your knowledge, then also this session is a must attend session for everyone. So before we start the discussion, I would request everyone quickly copy the link of this session, share it with your friends so that more and more students, they can join us live in this particular session and they get to know all the important updates related to the same. So let's begin the discussion. I will be discussing the MCQs which has a potential that it can be asked in 2-mark format as well as 1-marker format. So today you are going to enjoy really very well. So let's get started. Here we go with the first question. The first question is now on your screen. What does the question say? Question says that Indian government bond yields are influenced by which of the following factors? What does it mean? It means that if you are purchasing government bond, that means a financial instrument issued by the government against which government is going to provide you with rate of interest. What are the factors on which the return on your investment in case of government securities is going to depend upon? Sir, is it going to depend upon the actions of the Federal Reserve, US Central Bank, actions of RBI, inflation? What all factors are going to be included? Any idea, guys? I'm pretty sure you must be aware of this particular condition. If you're not aware, then I would say that means you are going to learn very good things today in this particular session. As you can see from this particular topic itself, that this is going to be really very important for all the students who don't know how bond yield is going to be impacted because of these 3 factors or which all factors. See, I'll take a very simple example. Let's suppose US Federal Reserve. Let's suppose US Federal Reserve increase its rate of interest. If US Federal Reserve is increasing, the rate of interest, obviously it will impact the Indian market. How it's going to impact the Indian market? So foreign investors, they will disinvest from India and they will be investing that amount in US because they are going to receive huge return. If that is the case, in India, demand on government bonds will decrease, and we know this very well. Whenever demand decreases, the price also starts falling down. And if the price start falling down, that means there is an impact because of the US Federal Reserve. So remember that this is going to be the first point. Second point is RBI actions. Or RBI actions, they also play a really very important role because RBI can change the impact. RBI can change the interest rates of the economy. For example, with the help of monetary policy, if RBI has increased or decreased the interest rates of the banks, it will undoubtedly impact the money supply in the market, which will impact the demand. And if the demand is impacted, it will result in change in price. So according to this particular point, this is also impactful. Inflation. So whenever inflation increases, we know that interest rate decreases. Yes or no? We know that interest rate decreases, and the moment interest rate decreases, the return or I would say the investment on the bonds will decrease, and if the investment on the bonds may increase or decrease depending upon the previous rate of interest, the prices will change, so it will impact, or inflation will also impact. So according to this, so all these three factors, they will impact the government security. So D option is going to be the correct answer. Prameshwar has given the correct answer. Very good. Moving on to the next point. The next question, I have given the solution. You can copy the solution. You can check out the solution by downloading the PDF, which will be available on my Telegram channel. Fine. Chal, next question. So which of the following statement is correct with respect to automated clearinghouse? If you know that National Automated Clearinghouse, earlier when physical checks were circulated in order to complete the process of clearing, that was known as clearing houses. But nowadays rather than circulating the physical check, these days what is done? So these days these checks are circulated in an electronic mode. That means with the help of an email, a scanned copy of this check is being circulated, with the help of which end of the day settlement is going to be done. So that kind of settlement where scanned copy is used, what we call it as truncated check. And in case of truncated check, rather than setting up physical clearing houses, we have virtual clearing houses, and those virtual clearing houses are known as National Automated Clearinghouse. First point, it is a computer-based electronic network for processing transactions. Yes, sir. It may support both credit transfers and direct debits. Okay. NPCI system is the regulator. That is true. So what do you mean by this? Both credit transfer and direct debit, what does it basically means? See, it may support both credit transfer and direct debit is basically means that it is designed to process the batches of payment containing containing numerous transactions, and if I talk about this, it charges fees to encourage its use, but this fees is pretty low, so that more and more transfers can be done with the help of same. So the answer is going to be D option. Again, I would say Parmeshwar has given the correct answer. Very good. Good luck. You are doing pretty well. Moving on to the next question. What does the next question says? So the next question is again important. Which of the following statement is or are correct with respect to stock exchange? That means National Stock Exchange, Bombay Stock Exchange. I don't know how many of you are aware. I don't know many of you are aware, but today both the stock exchanges, the major stock exchanges of India, they have fell down a lot. It is an exchange where stockbrokers and traders can buy and sell securities. Exchange where stockbrokers and traders can buy and sell security. That is true. Securities traded on a stock exchange can include stock issued by listed companies. Yes, sir. Only listed companies stocks are being traded. Anyone can trade on stock exchange. Anyone can trade on stock exchange. Now I don't know how you are going to take this statement. Anyone can make the transactions on stock exchange. That is not true. The reason is you must have a demat account in order to start the transactions on stock exchanges. In order to open up a demat account, you need a permanent account number. We call it as PAN card. So in that particular case, only those, I would say, individuals and institutional investors, they can invest, they can trade on the stock exchanges, but only and only if they fulfill the basic criteria as set by SEBI. Only and only if they fulfill the basic criteria which is set by SEBI. So many times, many of the individuals who possess the trading accounts, but still they are not allowed to transact because of the n number of restrictions introduced by SEBI. So anyone or everyone will be a wrong statement over here. Rest two statements are correct. So 1 and 2 is going to be the correct answer for this particular question. Got it, guys? Clear? Moving on to the next one. What does the next question says? Which of the following statement is or are correct with respect to certificate of deposit? Do you remember certificate of deposit? What is it? Whenever we talk about a financial institute, the financial institute which accept deposits from the public, and against those deposits, financial institute issues the certificate of deposit certifying the deposit of the depositor. Now this certificate of deposit can be used as an instrument. It can be used as an instrument to borrow the funds. That means you can use this instrument as a guarantee in order to borrow the funds in the market. So what is the benefit? On one side, your deposit is as it is, and against your deposits you have received a certificate of deposit, and with the help of this certificate of deposit, without hampering, without diluting, without, I would say, withdrawing your deposit, you can enjoy the facility of borrowing loan on that deposit with the help of this certificate of deposit. Is it clear? Simple example is, you have a fixed deposit account, that is FD, and with the help of your fixed deposit account FD, you can borrow the funds from the market. And against that FD, bank will issue you the certificate of deposit, and with the help of this certificate of deposit, you can borrow the funds from the market. That is what is called as certificate of deposit. So first is, it is a money market instrument. Yes, sir, because it's a short-term instrument. It is issued in dematerialized form against the fund deposited in a bank for a specific period. It can be issued in dematerialized form. That would have been correct. But it is only issued in dematerialized form. If I take it in this manner, then this will be a wrong statement. So I would say it is issued in dematerialized form. It is issued, it is issued, I'll take it correct. SEBI issues guidelines for certificate of deposit. So the guidelines related to certificate of deposit is issued by RBI because it is a money market instrument, and we know that money market is regulated by RBI. So all the instruments which are issued in money market, the guidelines for those instruments is being given by RBI only. So according to this, 1 and 2 are going to be the correct answer. Is it clear, everyone? So it can be issued in dematerialized form. That is true. So if it can be issued, it is issued for a specific period. The statement is correct. Moving on to the next question. Which of the following statement is or are correct with respect to over-the-counter market? What is over-the-counter market? Over-the-counter market means where buyer and seller, they practically come in front of each other. They practically sit in front of each other. They practically trade, or I would say they practically negotiate and complete the transaction. On one side, I'm giving you the cash. On the other side, you are giving me the instrument. That is over-the-counter trade. Now, it is a decentralized market in which market participants trade stocks directly between the two parties without a central exchange or broker. Yes, sir, that is true. They do not have physical locations. They are more transparent in comparison to stock exchanges. So the first point is they do not have physical location. That is true, because let's suppose if I am trading a share and I'm buying my share from Parmeshwar, and Parmeshwar is my neighbor. One day I was sitting at his place and we exchanged the share and money. Next day we were sitting at my place in my drawing room and again we made the exchange. And in both the scenarios it will be termed as over-the-counter exchange. So there is no physical location. That is true. They are more transparent. No, sir. The transaction happening between two cannot be transparent in comparison to the entire economic scenario, where in case of stock exchange everyone is aware of the price of each and every stock which is being traded, but in case of over-the-counter trade it depends on the two parties, which two parties are involved in the transaction. So according to this, third statement is incorrect. So if third statement is incorrect, I'll go with C, that is 1 and 2 only. That is 1 and 2 only. Is it clear? Moving on to the next point. Which of the following account is necessary to hold physical securities in a digital form and to trade shares in the share market. So if you want to hold your stocks, your trades, your bonds in a dematerialized form, for that, what do you know? What do you want? Sir, in that particular case, you need a demat account. So demat account, as the name suggests, demat stands for dematerialized, and it is basically a necessary account to hold the financial securities, and these securities are held in digital form. These securities are held in digital form. Demat account, they are maintained by depository organization. These accounts, they are maintained by depository organization, and in India we have two depositories which are operating. One we call it as NSDL, National Security Depository Limited, NSDL, National Security Depository Limited, and the other one is known as Central Depository Services Limited. Central Depository Services Limited. These are the two depositories which majorly provide you with demat account facility, which provides you with demat account facility. So there are four major charges which are involved in case of demat account. First is account opening fees, then annual maintenance charge, custodian fee, as well as transaction fees. So these transaction fees, the transaction fees is pretty low, but yes, there exists the transaction fees while utilizing the facilities, the services of demat account. Moving on to the next question. Which of the following statement is correct with respect to equity? It is the amount of capital invested or owned by the owner of a company. Okay. It does not take intangible assets into account. Stocks and equity are synonymous as they both present or represent ownership in an equity and are traded on stock exchanges. Easy question. This is an easy question. Expecting your answer for this. The question says equity is the amount which is invested or owned by the owner of a company. As you all know, in case of balance sheet, one side we have asset, on the other side we have liability plus equity. We have liability plus equity. So when we subtract liability from asset, the value which we are going to obtain is that is known as equity value. That is basically after deducting the liability, whatever is left, that belongs to the owner. So that is true. Intangible assets such as reputation or brand identity, they cannot, if we talk about them, sir, they are also included. They are also included in this account. So it does not include intangible assets into account. That is wrong. It includes the intangible assets also. So this second statement is going to be incorrect. Stocks can be traded. That is true. So 1 and 3 are true. So according to this, C option is going to be your answer. So according to this, C option is going to be your answer. So remember that intangible assets such as reputation or brand identity can be accounted for by the equity. That is true. So 1 and 3 are correct. Second statement is incorrect. So we will be excluding the second statement from our answer. Moving on to the next question. What does the next question says? Which of the following statements are correct with respect to escrow account? What is an escrow account? So escrow account basically is an account which is offered by a third party in case two parties are involved and two parties are getting into an agreement. In order to avoid counterparty risk, the two parties, they involve the third party and open up an escrow account with the third party where all the required documents, all the required assets, as well as the financial instruments, they are kept in that escrow account, and that escrow account holder, or I would say the escrow account provider, act as a guarantor between the two parties, and generally this offer or this service is given by the banks. Let's see. It is a temporary pass-through account held by third party during the process of transaction. That is true. It can hold money, security, funds and other assets. That is true. It provides security against scams and fraud, especially with high asset value and dispute-prone sectors like real estate. Dispute-prone sector like real estate. That is true. So answer will be 1, 2 and 3. These three statements are correct with respect to what? So with respect to your escrow account. Escrow account is dedicated account which cannot be used for other purpose other than obviously it is going to be used for security purpose, or it is being used as a third party guarantor account function so that the transaction can be complete. Next, which of the following statements are correct with respect to the stockbroker? Who is a stockbroker? So whenever we talk about demat account, these days demat account facility is provided by the stockbrokers as well, and stockbrokers are the registered entities which help the customers or the investors to open up demat account so that the individuals or individual investors can invest in the share market. Let's talk about it. Any person who is registered with SEBI, that is true, he or she is also a member of stock exchange. Okay, they buy, sell and deal in securities on the behalf of investors. So what is going to be correct? So he or she is also a member of stock exchange. That is true. They can buy, sell and deal in securities on the behalf of investors. So in case of investors, if you are making a deal on your behalf, the entire sale and purchase will be done by the stockbroker, because stockbroker has the access to make the transactions in the given, stock exchange in the given platform. Moving on to the next. Who is responsible for keeping as well as safeguarding the investments and securities on the behalf of owner? So when you want to safeguard, or you want to keep your securities safe, and the one who offers you with this particular facility, is basically termed as what? The one who offer you with this particular facility is known as portfolio manager. No, he is basically managing your portfolio. Merchant banker is basically helping you to understand when to issue the shares, at what price you must issue the shares. Sub brokers, they are the agents of stockbrokers, and stockbrokers we have already discussed, but custodian are the one who are responsible to keep your asset safe with them. And whenever you're keeping your assets safe with a party, you call that process as custodian. The one who provides you with the service is known as custodian. So custodian is responsible for keeping as well as safeguarding the investment and securities on the behalf of the owner. It safeguards your asset, insurance, hedge, everything. Is it clear? Sure. Moving to the next one. Which of the following statement is or are correct with respect to the external commercial borrowing? What is external commercial borrowing? Sir, external commercial borrowing means hello everyone. Hello. Good evening. Let's talk about this question. External commercial borrowing. External commercial borrowing basically means when Indian companies, they borrow funds from the foreign entities, that is basically included under external commercial borrowings. They are loans in India made by non-resident lenders in foreign currency to Indian borrowers. This is true. They facilitate access to foreign money by Indian corporations and PSU. That is also true. It cannot be used for investment in stock market or speculation in real estate. What do you say? Is this statement true? It cannot be used? No, sir. It can be used for investment in stock market or speculation in real estate. So according to this, your answer should be what? So according to this, your answer should be first and second. No, sir. That is incorrect. It cannot be. This is absolutely correct. This statement is absolutely correct. It cannot be used for investment in stock market. So 1, 2 and 3, D option is correct. I would say first and second statement were quite obvious. Third statement is important. Do remember the third statement, because if in examination a question is asked, this understanding is going to play a really very important role. Got it? Moving to the next. What does the next question say? Let's check this out. Which of the following statement is or are correct with respect to capital gain? So what do you understand by the word capital gain? See, very simple. Let's suppose I invest 10 lakh rupees to purchase a gold. And why I'm purchasing a gold? So I'm making an investment, and I'm making an investment with this motive that in near future, when the price of gold will increase in the market, I'll sell the gold and I'll earn the profit. So the profit which I'm going to earn through this investment is known as capital gain. Reason behind is gold which you have purchased with the help of 10 lakh rupees, that is basically a capital asset. And when you earn profit on selling, or I would say on diluting your capital asset, is known as capital gain. It is defined short-term capital gain, long-term capital gain on the time period for which you are holding your current asset. Let's check this out. It only includes tangible property. Tangible property means the property which can be touched. Tangible property basically means the property which can be touched. So this term, which term? Capital gain term is valid only and only for capital gain. Only and only for tangible property. Think and answer. It is the profit earned on the sale of an asset which has increased in value. That is true. It is only possible when the selling price of the asset is greater than the original purchase price. Yes, otherwise it will be capital loss. Otherwise it will be what? Sir, otherwise it will be capital loss. Obviously. Otherwise it will be capital loss. But my question is, what about the first statement? Whether the first statement is correct or not? No, sir. First statement is incorrect. Capital gain can be related to intangible assets as well. The assets which you cannot touch, you can only feel. Those assets will also help you to earn capital gain. Example is these days dematerialized form of shares, bonds, and many other which are in circulation. Moving on to the next question. The next question says, which of the following statement is or are correct with respect to annuities? As the name suggests, annuity word, it stands for annual. So they are insurance contract that promise to pay you regular income immediately or in near future. Okay. They cannot be structured into different kind of instruments. Annuity service providers are licensed by IRDA. That is Insurance Regulatory and Development Authority. Remember that, guys, annuities, they are insurance contracts that promise to pay you regular income immediately or maybe in near future, and can be classified by the frequency of payment dates. So they can be structured into different kinds of instrument, which gives investors flexibility, and they can be categorized into immediate and deferred annuities, and may be structured as fixed or variable. So on that particular basis, if I say they cannot be structured into different kinds, this statement is wrong. Rest two statements are correct. So answer is going to be C option. So annuity word is basically related to insurance contracts. So these are the insurance contracts which help you to earn regular income, maybe in near future or maybe from the very next day. For example, you must have heard that one of my friend's father, he retired from the government job, and after retiring he has invested his entire amount. In the insurance facility, or I would say insurance company or insurance policy. So the amount which he has received on retirement, he has invested that entire amount into the insurance policy, and against that policy he will be receiving annual returns so that he can survive after the retirement, and after when he is not earning anything, he will be earning, or he will be receiving the annuity which he will use to manage his day-to-day expenses. So it is related to insurance, and they can be structured into different kinds that we have discussed, and lastly they can be categorized into immediate and deferred. Deferred means future. In one case you may receive the return from tomorrow onwards. In some cases you may receive the return after 10 years, 5 years, 15 years, depending upon the investment and depending upon the tie-up which you have done. And obviously it is regulated by Insurance Regulatory and Development Authority of India. Got it? Moving to the next question. Which of the following statement is or are correct with respect to forwards? I don't know whether you follow me at 8 p.m. or not, but every day Monday to Friday at 8 p.m. I am taking up a session known as Basics of Finance. In the last session itself, I have discussed derivatives. I have discussed two types of derivatives, forwards and futures. So the question is on forwards. It is a customized contract between two parties to buy or sell an asset, product or commodity at a predetermined price later. True. They are not traded on centralized exchange. True. They come under the categorization of derivative. True. So answer to this particular question is 1, 2 and 3. If they are traded on centralized exchange, then it will be future. If the conditions are decided by a central body, then it will be termed as future. That is a basic difference between future and forward. That is a basic difference between future and forward. The next point is letter of credit. Basically, what is letter of credit? Whenever we talk about letter of credit, I don't know whether you have heard this term earlier or not. Letter of credit is a term which come across in your day-to-day newspaper readings, that nation has issued letter of credit to that country. For example, India issued letter of credit to Sri Lanka in the past. So these kind of statements are out in the newspaper a number of times. So letter of credit is basically a document that guarantees the buyer's payment to the seller or to the lender, and is issued by the bank and ensures timely and full payment to the seller. So basically, if I take an example, let's say there is an individual A and A is purchasing products from B, and at the time of making payment, A said that I don't have the adequate payment right now, I will be issuing you the letter of credit. So letter of credit is basically a document which is issued to A by his bank, which says that if A do not pay you in near future, we will be paying against this letter of credit instrument. So for B, it is going to be a guarantee instrument. When A will pay, he will take back the letter of credit. Otherwise, B will directly discount the letter of credit from the bank's branch. That is known as letter of credit. So and is issued against. So letter of credit is a document that guarantees the buyer's payment to the seller and is issued against what? It is issued against what? What will be the answer? So obviously, if you are receiving letter of credit and if bank is guaranteeing the payment on your behalf in near future, bank will ask you to keep certain security. And if in near future you won't pay back to bank, then bank will liquidate this security in order to recover its credit. So letter of credit against security is provided. So answer to this particular question is known as A option. Let's check it out. That is true. Now, guys, if you're planning to clear your upcoming RBI Grade B 2025 examination, we have a live course and the price of this course is all-time down these days. Just to help you to clear this examination, use the code MADHAV in order to enroll yourself in the foundation batch, which gives you one-stop solution for all your requirements for the upcoming RBI Grade B examination. Got it, guys? So that will be all from my side. If I talk about my class timings, I have a session Monday and Tuesday at 7 p.m. I have a session on Tuesday and Wednesday at 6 p.m. Along with that, I have a session named Basics of Finance, and for this you are getting a regular session, but the timing of this session is going to be changed, so that is the reason I'm not mentioning it over here. So Monday, Tuesday 7 p.m, Tuesday, Wednesday 6 p.m, and one session on Basics of Finance is available. This is YouTube. If you want to follow me, then Monday to Friday 9 p.m, I have a series on Testbook application. It's a masterclass, free masterclass, where I'm discussing basics of finance. And if you're preparing for phase 2, then Monday to Thursday at 10 p.m, I have a session for phase 2 candidates who are preparing for the RBI Grade B phase 2 examination. So this is my schedule. You can follow me. I would request you to follow me on the Testbook app so that you can join with me on regular basis in the Basics of Finance series, which is available on Testbook application. Got it, guys? So that will be all. We'll catch you in the next session. Good luck. God bless you. And if you want to download the PDF of this session will be available on my Telegram channel. Do join this channel to download the PDF for this session. Good luck. God bless you all. Bye bye. Take care.